Hello and welcome to another episode of the Uranium Market Minute. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you so much for tuning in. I really appreciate you being here. Before we get into it, nothing in this video is intended to be investing advice. I'm not your financial advisor, and this is not financial advice. Always do your own due diligence when it comes to investing, and always take responsibility for your own choices. Let's jump right into the daily scoreboard here. Spot price of uranium, 46.50 a pound mid-market. Pretty flat for the day after shooting up by almost $6 a pound yesterday. Why? SPUT was in the market, purchased another 1.15 million pounds yesterday alone. They raised an additional 44.4 million yesterday from new share issuance following the previous day of $90.3 million raised the day before. Absolutely incredible numbers we're looking at here. Huge volumes coming into the space again. They ended the day yesterday at 66.8 million in the treasury, and they ended the day yesterday at a 2.6% discount to NAV. That means, at least as of the open today, they were not able to issue more shares in the open market. They, of course, were able to buy uranium with that 66.8 million in the treasury. But assuming that the discount remained throughout the day, they likely didn't issue any further shares into the market today. That discount, is a little bit different than we've seen over the past week and a half. They've been generally trading at a premium to NAV. However, the rise in the price of the spot price yesterday just outpaced the stock. And so we need that 1% premium to NAV or greater for them to be issuing shares into the market, raising more money. Since the 17th of August, when their ATM went live, they've raised $651.4 million, and they've purchased 13.9 million pounds in just under 2 months. Absolutely incredible. The ETFs, URA reported 320,000 share increase in new shares issued, and URNM reported a remarkable 350,000 shares of new issuance. That was as of this morning, so that was in the day before, possibly 2 or 3 days prior, as we have a general lag time in that reporting. Those two share issuances from the two ETFs is a mandated buying of $37 million of their underlying holdings. When those funds flow into the ETFs buy the holdings. That's the flywheel. The AUMs combined between these two ETFs now sits at just over 1.9 billion. We're only 62 million shy from hitting a 2 billion combined AUM between these two ETFs. Just absolutely huge numbers. Let's take a look at the charts. Starting off with URA, looks like the ETF's taking a bit of a breather today, about half the volume from the previous 2 trading days, and it's down a couple percentage points today. Not a big deal here. After those 2 huge days that we saw yesterday and the day before, it's obviously natural that we see pullbacks. And anytime we're dealing with parabolic moves, and this, for an ETF to have a 10, 11% move in a single day, like it did on Tuesday, that's just huge. That's almost unheard of for an ETF, which is basically a diversified basket of stocks, right? So naturally, after these 2 big days up, we're seeing a bit of a pullback. Always some profit taking. No matter how good the fundamentals look, you'll always see traders taking profits when you have big moves like that. Let's take a look at URNM. Very similar chart, obviously. Let's look at the Sprott Physical Uranium Trust. Pulling back pretty well today. So it's very likely that by the end of the day, since the spot price stayed flat and they opened the day at a 2.3% discount to NAV, they probably ended the day at a slight premium to NAV. So it's very likely that maybe they ended up issuing a bit of shares into the market, and if not today, possibly tomorrow, if they remain at a slight premium to NAV, that I'm assuming they are at this point based on the spot price staying flat. Overall, good looking chart here. Nice to see that hard bounce off the 50-day. Big moves up, volume picking up again, volume drifting back down today a little bit, but nothing really too concerning here. I assume that the large caps are making similar moves. Cameco pulling back just a little bit, not giving up too much of those gains from the previous 2 days. Really, really good to see. If you see gains reverse or almost entirely reverse the following day or 2 days after, usually that kind of negates the reasoning for that move. So when we see just like a speculative frenzy go after a stock for a non-fundamental reason, oftentimes what will happen is those stocks will reverse and those gains will be almost entirely or entirely wiped out. So if you see big moves like this with a small pullback, that looks really good. I would love to see this stock chop around a bit here in this range, maybe from the $24 to $26 range. If it rested there for a bit, maybe formed a little bull flag, bull pennant, and then took off from there, form a nice little base before reaching that next multi-year high. Let's take a look really quick at NextGen. NextGen closed yesterday at an all-time high. It's going to close today, it looks like, at another all-time high. NextGen actually up on the day. Very, very good looking chart, especially to see, again, these big moves 2 days in a row without seeing much of a reversal. In fact, it sold off a little bit in the morning trading, and dip buyers showed up, and now it's positive for the day. Really good looking stuff. Let's take a look at the mailbag. Justin, my math shows that SPUT has purchased an average of 330,000 pounds of uranium per trading day since their ATM went live. Can they keep this pace up? Yes. Okay. So the person asking this question, yes, your math is correct. That's pretty amazing. So 330,000 pounds, that's close to the average amount of uranium that a 1,000 megawatt reactor would consume in a year. It's about 400, a little over 400,000 pounds of uranium in a year. So SPUT has purchased almost as much uranium on average per day to power a 1,000 megawatt reactor for an entire year. That's some pretty incredible perspective. So if we pan this average out and annualize it, we're looking at 86 million pounds over the course of a year. So can they keep this pace up? There's a couple of factors that will determine whether or not they can keep this pace up. First of all is the flow of funds. So the flow of funds has to be substantial enough to keep the stock trading at more than 1% premium to NAV and allow them to issue shares into the market at 50 to 60% of that daily trading volume in order to raise enough cash to keep up this type of buying. I don't expect this number to be annualized to reach that 86 million per year. I don't think that's going to happen. A couple of reasons why. Primarily, the buying is going to raise the price of uranium. So in order to keep this pace up, the ratio of funds raised has to increase in lockstep with the rising price in spot uranium to come even close to consuming that much on an annualized basis. So that is unlikely to happen, right? So as the price of uranium rises, they can purchase less and less with X amount of dollars. However, if they do get that New York Stock Exchange listing and the funds that are flowing into this vehicle grow substantially more, which is hard to believe, right? If they raised $90 million in a single day, 44 million yesterday, we're talking almost $140 million in 2 days. But if that can be outpaced, and knowing the type of liquidity and the type of funds that are flowing in the New York Stock Exchange, it's not out of the realm of possibility. However, I don't think it's intelligent to bank on this happening. So I think we can at the very least bank on the fact that they are here, they're not going anywhere, and they're really killing it on the TSX alone, right? And so even if we cut that annualized ratio into less than a third, okay? Let's say 25 to 30 million pounds over the course of a single year. That erases all secondary supply. That negates it. And secondary supply in the market is a huge piece of the nuclear fuel cycle in terms of reliable supply for the utilities, for traders. And so to have a buyer, an end user buyer, which SPUT essentially negate that secondary supply. That's really, really substantial. And you can take any supply demand model. And as soon as you erase that 20 to 25 million pounds a year of secondary, things look really dire really quickly. I think that the presence of SPUT in the market here is obviously a game changer. We've said it over and over. As soon as we heard the news in April, we advised our newsletter members over and over, this is going to change things for the uranium market, and any weakness that we have between now, which was April, and when they went live, which was August 17th, is an absolute buying opportunity. And so a lot of them took advantage of the dips that we saw in July and in August. And so now that they're here, and now that you're seeing yesterday and the day before, a repeat of what happened in August and the early part of September in terms of volume, in terms of shares issued, money raised, pounds purchased. We've seen the big move in the spot price, almost up $10 in just a few trading days, right? Now we know what is possible. And it's important to recognize that, because as markets dip, and they will in the coming months, right? I'm actually still expecting a seasonal up move here for a number of months. It's generally going to be trending up probably through December, January, maybe even a little bit further. Beyond that point, we will see some profit taking. We will see volatile to the downside. When that happens, it's important to keep all this stuff in perspective, because it'll probably get euphoric towards the end of that run. Something will pop that euphoria bubble, some type of FUD, fear, uncertainty, and doubt, some kind of news. Who knows what it'll be, but it always happens. And we'll have another chance to add on another dip. If you want to take profits on the way up, that's up to you. Either way, it's important to recognize what is happening in the market now and understand that, barring any substantial change to what SPUT is able to do currently, this is likely to continue, and it's likely to go in these cycles, like this sinusoidal wave that generally trends up, right? Higher high, higher low, higher high, higher low. That's how bull markets work. We're day 3 of the next leg up into that next higher high in terms of the uranium price and many of the equities. So you can't really annualize these things, but yes, your math is correct. They've really just absolutely hammered the spot market. And I think that the moves that we're seeing in the price is indicative of the availability of material. So yeah, it's really substantial. And I'll mention again, this coming Tuesday, the 19th, we are having a members only webinar for Uranium Insider Pro members, our newsletter service. And we will have CEO of SPUT, John Champaglia, as our guest. He's going to do a brief, kind of keynote and take on some questions from us and from our members. So if you are a member, we'll see you on Tuesday. I will not be here tomorrow. Today is Thursday, so Friday the 15th, I'm not going to be doing Market Minute. I'm going to be out of town. But we will see you on Tuesday for that members webinar. So until then, have a great weekend, and we'll see you next week. If you're interested in getting a sample newsletter or have any questions about our service, send us an email, support@uraniuminsider.com. We'll see you guys soon. Cheers.